After a whirlwind week at Computex, it's more apparent than ever. Wall Street still underestimates Nvidia. The secret to understanding this company isn't just about crunching numbers. It's about grasping the role its technology plays in shaping the future. The evidence from Taiwan and Nvidia's latest earnings call points to one conclusion. Nvidia is on the path to becoming the world's first $5 trillion company. Imagine a company whose technology is now as essential to the future of AI as electricity is to modern life. Nvidia's latest financial results are jaw-dropping, but the real story lies beneath the headlines, where the market still hasn't fully caught on. Direct research, testing products, speaking with engineers, and observing firsthand how industry leaders and competitors use Nvidia's technology reveals a gap in Wall Street's understanding. The long-term impact of generative AI and Nvidia's role in it remains widely underestimated. Two major events in Taiwan, Computex 2025 and Nvidia GTC Taipei, were packed with companies tackling every aspect of AI, from self-driving cars and supercomputers to robotics and digital agents. The scale of innovation was staggering, and Nvidia's presence was felt everywhere. Nvidia just reported record quarterly revenues of $44.1 billion, up 12% quarter-over-quarter, and an astounding 69% year-over-year. Earnings per share reached $8.10, up 33% year-over-year, though down 9% from the previous quarter. The company's data center business now accounts for 89% of total revenues. Data center revenues alone hit $39 billion last quarter, up 10% from the previous quarter and 73% year-over-year. For context, Amazon Web Services, which powers about a third of the internet, reported $29 billion in revenue last quarter. Nvidia's $39 billion underscores the explosive growth of global AI infrastructure. Nvidia is not just a data center company, it's an AI infrastructure powerhouse. Projects like Stargate in the US and UAE highlight national-scale AI initiatives with Nvidia at their core. Across the globe, sovereign AI factories are being deployed, tailored to each country's needs, laws, and languages. Soon, AI infrastructure may be measured in total token generation, much like electricity is measured in terawatt-hours. Yet, if Nvidia is riding this AI wave, why did earnings per share drop 9% quarter-over-quarter? The answer: geopolitics. On April 9th, the US government informed Nvidia that a license would be needed to export Hopper H20 chips to China, effectively cutting off access to one of the world's largest AI markets. As a result, Nvidia had to write down $4.5 billion in unsold chips, slashing gross margins to 61% and EPS to $8.10. Without this, margins would have been a robust 71.3% and EPS $9.60. China's AI market is valued at over $50 billion, and half of all AI researchers hail from China. Companies like Huawei, BYU, Alibaba, and DeepSeek are pushing forward, regardless of US chip access. Restricting Nvidia's access doesn't stop China. It simply encourages more innovation from rivals. The real question: should one of the world's largest AI markets run on American chips, or those from competitors? With advanced tech like 6G and quantum computing on the horizon, this is a trillion-dollar policy dilemma. Despite setbacks, Nvidia's other business units are thriving. Gaming revenues are up 42%, professional visualization up 19%, and automotive and robotics up 72% year-over-year. These segments make up about 10% of total revenues, but growth is rapid. At this pace, total revenue could approach $200 billion in 2025, more than Tesla, AMD, and Palantir combined. However, turbulence remains. Nvidia's CFO warned of another $8 billion write-down for unsold H20 chips next quarter. Meanwhile, China's AI market continues to grow at roughly 30% per year. Data privacy remains a pressing issue. Over 100 online brokers were found selling personal information. Services like Delete Me offer a hands-free way to remove such data, providing ongoing scans and privacy reports to ensure families remain protected. Nvidia faces export controls and multi-billion-dollar write-downs. Yet at Computex, Jensen Huang unveiled a breakthrough that could redefine AI infrastructure. At Computex, Nvidia's CEO introduced NVLink Fusion, a networking technology enabling Nvidia's proprietary NVLink interconnects to work with non-Nvidia processors, such as Intel CPUs, AMD GPUs, and Broadcom's custom chips. Data centers can now fuse third-party chips with Nvidia's high-speed networks using a special NVLink chiplet. This is a game-changer. Companies like Google, Amazon, and Microsoft can combine custom chips with Nvidia's GPUs, creating bespoke AI solutions without vendor lock-in. Chipmakers like Qualcomm, Intel, and AMD can adopt Nvidia's networking tech instead of developing their own. For Nvidia, NVLink Fusion is both an entry point into any compute cluster and a hedge against a future where custom chips might be favored over GPUs. NVLink Fusion's coordination is managed by Dynamo, Nvidia's open-source inference software. Dynamo orchestrates parallel processing, optimizes utilization, data caching, and workload routing, maximizing token generation and thus revenue. NVLink acts as the nervous system of an AI factory, with Dynamo as its brain. These innovations solidify Nvidia's role as the backbone of global AI infrastructure. Even as U.S. export controls limit access to China, NVLink Fusion and Dynamo open new markets in the U.S. and globally. Every data center and high-performance compute cluster, many already invested in non-Nvidia hardware, can now integrate Nvidia's networking and software solutions, dramatically expanding the company's addressable market. What does all this mean for Nvidia stock? In the short term, losing access to China is a clear negative and the write-downs are significant. Yet, data center revenues still grew 73% year over year, a remarkable feat for a company of this size. Looking ahead, Nvidia has multiple catalysts. GTC Paris is approaching, promising more AI breakthroughs. The highly anticipated B300 Blackwell Ultras are set to ship in the second half of 2025. The future isn't just about the next chip, but about the leaps in performance between architectures, driving down AI costs and fueling global adoption. Despite headwinds, Nvidia's earnings call impressed. With innovations like Dynamo and NVLink Fusion, Nvidia is expanding into previously untapped markets, solidifying its position as the AI infrastructure leader. The path to a $5 trillion market cap appears clearer than ever, with continued growth and innovation on the horizon. For those interested in further insights on the evolving tech landscape and other promising stocks, stay tuned for upcoming deep dives. The best investment remains a commitment to learning and adapting in this rapidly changing world.